All right, welcome back and thank you so much for staying with us. You're watching TV47 Breakfast. If you're just joining us, I want us to shift gears now and talk matters business. Yeah, so this morning we're talking about Fanikisha, and this is a banking solution that is designed specifically to empower women at, they say, every stage of their journey. So if you're a woman and you have a business, then Fanikisha is here to help you with that. And with me in studio to help us with this and understand more about Fanikisha is Anne-Violet Gikuno. She's the Equity Bank Kenya Relationship Manager, High Net Worth Individuals. Karibu sana Anne to studio. Anne-Violet.
Anne-Violet.
When I say Anne, should I include Violet? Anne-Violet?
Yes. But if you want one name, you can call me Violet.
All right.
Yeah.
So you prefer Violet?
I prefer Violet.
I feel offended because
so you take the Anne.
Because I'm also Anne. All right, we welcome you to be part of this conversation through our socials, TV47 Kenya on Facebook and on YouTube and X. It's TV47 Digital. If you have a question for Anne-Violet here about Fanikisha and how you can sign up for this, then we do welcome you to be part of this conversation. Walk us through what Fanikisha is all about, Anne-Violet.
Thank you, Anne. So Fanikisha is a tailored financial solution, all-inclusive for women. We are long-term partners for the women in the bank. I know you're wondering why women. We know women have unique psychological ways in terms when it comes to business. They are risk-averse. They have a lot of responsibilities back at home. So as a bank, we felt they need a partner that will work with them when it comes to business-related issues. And so that's how Fanikisha came along, to ensure that they have a partner that works with them. Yeah.
So when did this come along? Because I'm thinking about the gaps that you're trying to fill, and I do understand you've talked about women having different psychological problems and reasons, but when did it really start, and the gap that you were specifically looking to fill?
Thank you. Fanikisha surprisingly started back in 2007.
That's a long time.
Yeah, that's a long time. We may be talking about it now in 2026, but it started back in 2007. And so the gaps we looked at are, you find that women are in different stages. So there are those who are starting up, there are those who are growing, there are those who are expanding, and there are those who are already there. Their needs are very different. And so that's how Fanikisha came up. And we have tiered them. So we have Fanikisha Shaba, which is for women who are starting up. So these are women who are in businesses less than 1 year. Then we have another stage called Fanikisha Dhahabu. So these are for women who have been in business for slightly above 1 year, but their turnovers are not yet there yet. So you call it Fanikisha Dhahabu. Then we have another tier called Fanikisha Almasi. So now these are women who've been in business for more than 2 years, and now their turnovers have increased. Now it's from 51 million up to 800 million. Then there's another tier we call Fanikisha Platini, which is mostly where I take care of my clients. These are women now whose businesses have grown from the above 800 million when it comes to turnover. So now when you look at those tiers, you realize the needs of women are very different. Like for Shaba, for example, if it is insurance needs, it can be the same for the person who at Platini. So equity came up now. Each tier has tailored solutions that speak to the needs of that woman at that particular stage they're in. Yeah, that's all.
You said, you know, it started in 2007 and we're just talking about it in 2026.
Yes.
Then why? Why is the conversation coming up more prominently in 2026 as opposed to, you know, 2007, 2010, 2020? Why 2026?
We feel now it's the right time to talk about it because we have really impacted many women, and it's the high time that we let the world know so that we can have other people come on board. We have around 2.5 million women who've been supported through the Fanikisha, and then around 565 billion in terms of loans have been disbursed since then. So this is the right time to talk about so that we can have now more people come on board and be also part of the success. So that's why we're here today.
All right. I want to know why you are so much interested in Platini, because you say that it gives a turnover of about 800 million Kenyan shillings.
Yes.
And I'm thinking about that businesswoman who's just starting, you know. Are you not quite invested in them as much as you're invested in, Platini?
No.
How different are they?
They are different in terms of their needs. And each tire has someone who looks into them. So for Shaba, we have specific RMs who handle women who are in that stage. And how we categorize them is in terms of the span of the business, how long the business has been, and the turnovers. And so we have specific RMs in each tire, so that if your role is to take care of the Shaba woman, that's what you do. Because even the needs, you will understand them, you will speak their language. And when there is someone now in Platini, you'll also speak to the Platini woman. That's why I say that's where I sit. Because now when I am speaking to the Platini woman, their needs are very different. These are people who have large corporates. They are looking to exposure to new frontiers. Like as Equity Bank, we have trade missions where we take them to various countries to expose them to people of similar minds. But probably someone who is at the Shaba may not require that yet. But as Equity Bank, we are your growing partner. So we walk the journey. So you start from Shaba, Dhahabu, Almasi, all the way to Platinum. But doesn't mean if you're not in equity, you cannot also be part of this. When you join us, we'll also evaluate you and see what category are you at. If your business is over 2 years, what are your turnovers? And maybe you fall in Platini. It doesn't mean that when you join equity, you have to start from Shaba. You can start at whatever stage. When you evaluate your cash flows and your business and all that is when we know what category you are. And so we put you in that category, and then so your needs will be looked into depending on the category you are at. I love that clarification that for you as Violet, you specifically just focus on Platini, and then there's somebody else who focuses on Shaba. But clarify for us on that point of, you don't have to be a member of Equity Bank. Really, so if, for example, I'm with another bank, which of course I do not want to mention, they'll have to pay us for that. So I'm thinking, if I'm working with a different bank, so how do you walk me through that process of, getting myself into the tires that you offer at Fanikisha? All right, if you want to join us, like currently you're in another bank, you can SMS to 24990. So you indicate your business and location, and someone will reach out to you and will place you somewhere. However, you can walk into a branch where you feel comfortable with, and once you speak to an RM, who most likely will be at the reception, will guide you to the right person. And when you have a sitting with that person, they will listen to you. They will be in a position to understand your business or whatever your needs are, and a solution will be tailored for you. As a bank, we tailor solutions depending on an individual. We don't have generic products. It's tailored.
So the famous question, and anytime we talk about women, men also, they always want to be included in this conversation. But I'm thinking about why the focus is specifically on women. And you talked about, women, we have specific reasons, right, and challenges. But these challenges on entrepreneurship are similar to everyone. So is there like something for men as well, aside from also women getting priority with Fanikisha?
Yes. I mentioned the only reason that Equity also chose to have a specific product for women is because of how women are wired. But generally, all the other products are for the boy child, are for men, because men tend to be very, they take risks, some calculated, some go all the way. So they may not require that hand-holding. But as a bank, doesn't mean we do not bank men. And doesn't mean we handle them any different. But in terms of the needs, or in terms of, pricing, or in terms of how we tailor these things, is why we have specific for women. Because if you do not speak to women in a certain language, they will tend to take a backseat. Like, I'd like to give an example. Most times you'll find, if you let a woman know that she is eligible to $1 million, most times she will choose to take 500,000. But if you tell a man he is eligible to $1 million, he'll say, why not 1.5? You see? So that's what makes brings up the need of having a bank that understands how women are. Because if a woman is eligible to $1 million and you give them 500, it may not enable them to achieve what they really need to. So those are the kind of dynamics that make us have specific products for women, but doesn't mean we do not serve men. If anything, men are more in the bank in terms of borrowing, in terms of even deposits, than the women.
So at the end of the day, men are still privileged.
Men are still privileged,
right?
But women need a special hand-holding. Yes.
Talk to us about some of the businesses that you see women are, getting into more. That, of course, just grants them some sort of loan when they are registering up for Fanikisha.
So you'll find many women also getting into the tenderpreneur space. So you'll find these women will need bid bonds. Some will also need to have LPO financing. So these are kind of the business that women are really getting into. And before, you'll find it was more dominated by men, especially the tenderpreneur space. You'll also find even manufacturing. So all those businesses that you imagined were more male, dominated, women are getting into it, and that's where Fanikisha comes in.
Talk to us about some of the myths, around banking solutions, financing solutions that, banks offer. That, for example, when these small businesses are approaching you, small women-owned businesses, that sometimes you find that they're quite skeptical about. What are these myths?
You'll find the myths that people have about banking is that they imagine that banks are out to auction. So you'll find people are reserved, especially with startups, that what if I take a loan and then all the bank is up to is to auction. But what I want to really talk or explain or expound is that banks actually are not really out to auction. And security is not usually the thing that a bank is up to get. Actually, security is more of a psychological thing. As a bank, what we really are interested in when we are checking your eligibility to a loan is your ability to pay. And for sure, if your ability to pay is there, then chances are we don't get to that level of you need to be extra. So those are some of the myths that we have out there, that banks will auction you. Banks are interested, it's about them. But for us as Equity and Fanikisha, we really want to be that partner that helps you grow all the way up. You start, you grow, you expand, and get to that large corporate. So we really are not just out also even to lend you. The other thing is, the myth also is that people imagine banks, it's just about loans. No, for Fanikisha, we also have very tailored products like insurance, where we have the last expense. Many times people don't want to talk about death, but it's inevitable. So those are some of the products we've come up with. For as low as 5,800 when you're a startup, you'll get a limit of 50,000 for last expense, 50,000 inpatient. And for 500,000 inpatient, if you're in the Platini category or even whatever category, 34,000 premium per annum will get you 500,000 inpatient. So those are some of the products we come up with for Fanikisha. We also have networking programs where we expose people of similar interests, put them in one room, so that networking is also it enables people to even get there. We have people who are in Platini category. They inspire the people in Shaba, the Habu, to get to their level. So banking is not just about lending. It's also, it's coming up with products or solutions that help these people grow, not just have survival mode or just be there to borrow. We also help you grow and create wealth so that you now become self-sufficient.
And traditionally, banking often demands heavy collateral, which of course has historically locked out women. And somebody may want to understand how Fanikisha is now different in this case.
Okay, how Fanikisha is different. Remember, I talked about the various tiers. So if you're in the Shaba category, chances are, since you're a startup, we know you may not have security yet. So our way of securing ourselves, we may ask you to get guarantors from relatives, from friends, or, you know, so we have a way to help you tackle that, because we know you've not gotten there yet. When you grow to the hub, now we can use your cash flows, because now the business has grown maybe 2 years, so we're able to see the trend. So we don't have to really depend on security. And that's the way we change that, going up the tier. If you're in Almasi, most likely you've already come up with a niche that probably your role is you supply cement, you supply beverages. So you can be given a loan, unsecured loan of up to 250 million, depending on your cash flows. Because now we already know you've come up with a niche. So we'll support you with unsecured to supply to those particular niche, if you're in cement, if you're in beverages. So those are some of the things that we have come up with to ensure that it's not all about collateral, because doesn't mean that since you're in business, you have sufficient collateral. So those are some of the ways we've come up with to tackle that. We've also partnered with global institutions that help us bridge that gap. You'll find someone already now has security, but it's not sufficient. So these global funds will help us bridge that gap, because maybe the security is not sufficient given the amount that this person may require to make that business a success. So those are some of the mitigants or ways or solutions we've come up with to ensure that it's not all about security, and we don't lock out potential simply because they do not have security.
You mentioned something about some needing guarantors. I'd love to assume these are people in the Shaba tier.
Yes.
And must guarantors be equity members?
Yes, okay. Yeah, sometimes it has to be equity members, or sometimes it's someone from another bank. But there's a document you have to fill that in case this person is not able to, you know, service that particular facility, you're eligible to help that. And why we would prefer you to be from equity is because if you're from another bank, it's beyond us. Though case to case we may consider, depending on who it is, it could be another bank, but the most preferable is you ought to be a member of the bank, because that will make things easier for us in case we get to that level. But that's not our wish, to get to the level where we have to use the third parties. Yeah.
In case where you know, somebody is not an equity member and you have to liaise with another bank, how does that relationship work? Do you liaise with this bank? Do you talk to them and tell them that, you know, in case this member or, you know, our member of Fanikisha doesn't give us back our loan, then their guarantor is from your bank and you're going to... How do you do that interaction?
No, that one is almost... it's not something we really go to that direction, because you see, that bank has a different relationship with that particular client. That's why I said it's case to case. So if you're not...
It's an isolated case.
Yes, it's an isolated case, and most probably will not now need to. If it's something we've agreed, most probably this is someone who maybe has come up with a standing order that in case this happens, this is what you will do. We will not involve that person's bank, because that's a totally different institution. That's why I said it's an isolated case. So it will be unique, and at that particular point, we may have come up with mitigants to ensure that in case this happens, since it's another bank, this is what will be done. So we'll have already dealt with it at the point of inception. Yeah.
You mentioned something about the 5,800 Kenyan shillings.
Yes.
It's an annual health cover. What does it specifically take care of?
It takes care of your inpatient, outpatient, and last expense, because those are the main things that we as a bank feel are important to that particular tier. So with 5,800 I mentioned, you'll get an inpatient of 50,000, because we imagine at that level you're not going to be going also to the tier 1 hospitals. You're also going to tier 3 or, you know, that kind of hospital. So with 50,000 inpatient, it is sufficient to cater for, or at least cater for a significant proportion of your bill. You have last expense of 50,000, that is if you lose a close, your nuclear. And then you have also outpatient. So that's what it takes care. And you can keep adding if you have, because it's up to 4 children. So if you have more, you add an extra 1,000. So it's a whole, you know, tailored way of doing things. And it has Shaba all the way to Platini. Yeah.
So walk us through some of the primary milestones that you have achieved as Fanikisha since, of course, 2007 up until 2020. It's a decade gone?
Yeah, decade and a half, because it's 2007 to 2017.
Yep,
that's
right.
Yeah, so it's
a decade plus.
Yes.
Talk to us about these milestones that you have, you know, walked through as Fanikisha.
We have seen, the key things is that, without mentioning, we've seen people grow from Shaba all the way to Platini. Someone who started as a kiosk or a mama mboga has grown, started now a shop, gone, and now they even now have a supermarket, and now they're even suppliers. So those are some of the milestones we have seen. We have seen even people who started off as groups, because remember, one of the journeys of women, they start off as groups, and they've gone all the way, bought land, built, come up with a mini estate. So we have a million, okay, for lack of a better, but very many success stories of people who have grown through the ladder. Some have become landlords, some have become, you know, large corporate directors, having started from down there. So those are some of the stories that we really have, without having to go to specifics, but we have quite a number.
So this is about the milestones and the impacts that you've been able to make as Fanikisha. But I'd also love to understand that sort of evolution from 2007 up to 2026. What have you had, you know, to contribute more, to add on to, you know, the initial plans that you had with Fanikisha? Just how the program has evolved since its inception up until 2026.
Oh, thanks for that question. I mentioned since 2007 to date, we have around 2.5 million women who have gone through our program, through financial literacy, the network programs that we've had, that some of the affordable health solutions we've offered. We have disbursed 565.5 billion.
Was this there initially in 2007?
It's now the journey. That's the lump sum from 2007 to date. Those are the kind of numbers we have done. 2.5 million women having gone through that program, 565.5 billion. Those are the kind of numbers we have dealt through that product. And like you asked earlier, why now? Fanikisha has been there. Many women have consumed that product not knowing exactly that it was Fanikisha. I think we were taking it as in-house. We are the ones who understand that this is Fanikisha we are offering to the women. But now we are coming out here and letting you know we have this product. So we have many women out there who have benefited from this Fanikisha since 2007. But maybe some of them didn't know that this is actually what they were consuming. That's why we're out here now to speak about it, to let people know that this has been there, people have benefited from it, and this is what we've done as a bank. Yes.
Talk to us about the financial literacy programs that you offer. What do you teach them, and how do you take them through these classes?
Okay. Financial literacy, we have Equity Group Foundation, which takes care of that. So financial literacy is teaching people, depending on the categories they are, on their entrepreneurship skills. Because you remember, a startup may not even be in a position to even just come up with a schedule of how they spend. So we come up with programs that teach them how do you take care of your books in terms of inflows and outflows, all the way up to Platini. So we have Equity Group Foundation, which has a pillar on financial literacy. So we do it in groups, we do it in sectors, come up, and each branch will be sometimes asked to take women in a certain category, and then they're taken to a group and taught depending on what they need to learn at that particular time. Because like we said, we treat them in various tiers. So this financial literacy will also be done in those tiers, depending on what is important. Startups will be taught about the basics. The Habu, now they've grown, so now they need to learn about even cash flows. If it is Almasi, now it's about bid bonds. You have debtors, you have what. So all those things will be taught depending on the whatever category. That's how we do it as a bank.
Is it mandatory?
No, it's not mandatory, but we try our best to ensure that as many people join. It's not mandatory, but we try.
So why is it important? Because we do understand that sometimes, even as much as we say women are underprivileged,
Yes.
when you're talking about bank financing, then financial illiteracy is also on the rise. So
Yes.
why is it important that you take them through these classes?
Why it is important, remember, we are a partner. We want to be a partner to these women. So if we do not train them, the bank is also on the receiving end in terms of they'll not be able to make payments. They'll not be able to even grow with the bank. And humanly speaking, when you don't empower someone to learn how to spend the money you're helping them create, chances are it's you they will not like. They will feel like, you, why are you auctioning me? You, why? So for a bank, we feel it is our responsibility to ensure that they are impacted with the right knowledge, so that at the end of the day, they also are able to service their facilities. They are able to invest and get returns that make them happy. You see, in part of our financial literacy is also teach them on where you can invest your deposits, how you can invest in bonds, such things. So we feel if we are part of this, it's also a plus for us, and we ensure that we have also minimal people who fall off the program when it comes to servicing facilities, when it comes to return on investments. So that's why it's important for the bank.
Now that you interact with these women a lot of times,
Yes.
tell us about some of the common mistakes that you see women entrepreneurs make that maybe somebody watching would also learn from if at all they're thinking of registering up or signing up for Fanikisha.
Oh, thanks. That's a very interesting question. Some of the mistakes women make, or generally, let me not even just say women, but women mostly, because today we are talking about women, is diverting funds. So you will come to the bank and your key need at that point is it's a project finance. So you want to build a few houses or even one house. And so the loan or the facility that is given to you is for that purpose. Then along the way you realize, my stock, someone is going to China and I need to stock up. So you feel these few coins that are meant for cement or to pay, you send it, you wire it to China or whatever country that you're importing goods. That really brings a gap. It may look like something very small at that point, but it has an impact because now you've created a gap. And of course, there are milestones that are measured when it comes to project financing. And maybe where you took the money to this other side of business, it continues to support that other side of business, and this one suffers. So that's why you find sometimes someone is running a business, but a project somewhere stalled because they diverted funds and have not been able to rewire it back. So those are some of the common mistakes you will find, and that's why we will find some of the things that financial literacy works on is to teach people, let money for business remain business. If it's for projects, let it be. Don't mix issues, because that's where problems come up, and we've seen even bigger players getting into such problems.
So is profit always a sign that the business is healthy? From where you sit really, and your interaction with especially businesses that have started from Shaba all the way to Platini, making profits, is that always a sign that, you know, this business is doing so well and is very healthy?
Of course, when you say making profits, that means it's making profit. Maybe how I would say is cash flows, turnovers, does not necessarily mean you're making profit. But when you're making profit, you're actually making profit. But huge turnovers or huge cash flows does not necessarily mean you're making profit.
So what's the difference?
The difference is you need to understand from this money I'm turning around, how much markup is coming up from it. Simple mathematics. If I turn around 10,000 every day, how much, when I separate my overheads and stuff, how much is the markup from that? So you cannot be turning around 10,000 and you spend 10,000 to pay your workers, to pay the bills. And so if you're turning around after you've paid all your expenses and demands from that, the difference, that money that is left, that's your profit. So that's the difference, because we may have people who really turn around a lot of money, but they actually don't make profits. So those are some of the things we also look into when we are dealing with you, and also understand where this money is coming from. For example, if in your chama, you're the treasurer, and so when there's a contribution, you're the one who sent that money. So if I pull, for example, and money was being sent to your bank account, if I pull that statement, it will definitely show me Anne has turned around 200,000 this month. But was that money yours? Remember, people are sending you the contribution. So those are some of the things we also keen as a bank to look at. Because doesn't mean because Anne's account had 200,000 this month is actually from the business. So we get to compare what you do and what is in the account to understand. Because if you also make a mistake in that, can also have a ripple effect. So in conclusion is that doesn't mean when you turn around a lot of money, you actually make profit. But you can make profits even from small monies. And you can fail to make profit even with huge lumps of money. So those are some of the things that people really don't interpret well. Yes.
And that will get me to the next question. The criteria that you use to determine startups' credit worthiness. Is it just to expound on that point, because I think you were getting there when you were talking about a chama, because if I'm receiving the contributions, that is not my money. Then what will you use to determine my credit worthiness?
So for startups, that's why I said in startups now you're guaranteed by other people. For a startup, you come and tell us that I want to start a business for selling these cups. So we look at what is the plan. How much are you going to? So we look at, you tell us that this cup I buy it at 50 shillings, we'll be selling at 70 bob. So we are going to take you and understand when you sell it at 70 bob, for each 70 bob you sell, how much will go to, if you have a shop, how much will cost you in the rent of that shop, overheads. So that's how we're able to analyze how much we're giving you, will you be even able to pay back this money? So that's how we analyze based on the business that you've told us you're starting, how much you'll be making from that business, how much are your expenses, simple mathematics, so that when we are loaning you, for example, we are able to tell that if this person sells this cup at 70 bob, they actually will be in a position to pay overheads, pay their steamer, and all that. Yes, so that's how we analyze, based on case to case.
So how fast is the turnaround time from application to loan disbursement time?
That's very relative, but we are because every loan is different. Because you see, a startup loan is very fast, based on even the documentation. So the turnaround or the TAT of such can be 48 hours. Because even what you're required to provide is not complicated. But when it comes to someone who is being appraised for, and they have a turnover of over 800 million, then definitely the turnaround may differ. But at the point of which you're applying the loan, we let you know. This is the match time we will take, and this is what is expected. But if everything is perfectly going well, we have a very vibrant turnaround. Like the 800 million people cannot go more than a month. For the Shaba, it's 48 hours. But it's based on the tier you are at, and we declare that at the point of the documentation. Because every tier is different, documents are different, clients are unique, and so we work with you and let you know. And some will come and tell you, I need the money by the end of the day. So if it's by the end of the day, they'll tell you, I need this. If they provide, then we work with that. Yeah, because
you give them, if I need money today,
like
and I have the right documents, you'd give me that money?
Yeah, we have such cases because they brought the right documents. It's a matter of clicking. Remember, Equity head office is here, the group is here, so all the decision makers are around. So that's why I said, it's case to case. There's someone who will come in the morning, they need this in the evening, they have the right documentation. everything is processed, because we've really also invested in serious systems. So that's just a matter of coming from this stage to another, and disbursement is done. Yeah, so we have people who will come in the morning, and in the evening they have the money, because it all depends on if you have availed the documents. As a bank, we are ready to serve you at that point, only that you have to in terms and conditions apply. Yes.
Do you cap that amount at a certain price that you're disbursing, especially for the ones who, you know, come in the morning and then they need that money, you know, by evening? That is very interesting, because maybe somebody is watching and saying, nataka loan, wacha niende Equity sahi.
You see, for example, you'll find someone who's, I know when I say that, you find that very interesting. But you know, we have people whose securities are already charged to the bank. So they don't need to come and value again. And so, for example, they had a security that is charged to the bank of around 200 million. And they just need 10 million. So the bank is secured. They just need to make a formal request. It's done. Because we don't need to charge. We don't need to go secure. Everything is done. And that's why I mentioned that's what the bank is about. Relationship management. So when I sit with you and understand your needs, I'll tell you, even when you clear that loan and you helped you buy a plot, I will advise you, don't discharge that plot yet. As much as you've cleared your loan, don't discharge. Because there will be a day you will need quick fix, and since that plot is still charged to the bank, you will get your money within a day. Because, for example, I go back to my example, it's charged at 200 million. You only need 10 million. It's just paperwork. Apply, put in the system, everything else, because we have the security, and we've analyzed that you have the ability to pay, and we have your history. So those are some of the benefits of having stayed with us for a while, because we have your history. We already know how you pay your loans. We already know how you bank with us. We know your business. So when you need something or a quick fix, it's a matter of recommending, and things are done.
Interesting. If you're just joining us, we're talking about Equity's Fanikisha, and it's a transformative banking solution that goes beyond just financing services, and it's a holistic program designed specifically to empower women at every stage of their journey. So whether you're looking to start a business, grow your wealth, they say scale your enterprise, or secure your legacy, Fanikisha gives you the right tools and the right financial partners to do it confidently. So if you do have a question for our guest this morning, she's still here. You can call in live. There's a number on your screen. Our WhatsApp line is also active, 0793267279. We have Anne Violet Gikuro in studio. She's the Equity Bank Kenya Relationship Manager, High Net Worth Individuals. She's specifically tailored to those in Platini Tire, but they'll also give you, people, if you're just starting up at the Shaba Tire, then you'll also have your people to guide you with that. Walk us through the interest rates per tire. Because I know you'll tell us, it varies from tire to tire. It's not the same for people who are starting at Shaba. It's not the same for people who are in Platini. So how different are they? How do you tailor these interest rates?
These interest rates are tailored risk. Remember, now we have a CBR rate, which is currently at 8.75. So allow me not to give the specific interest rates, but the current CBR rate is at 8.75. Then now there's a margin that is put depending on the risk. Shaba all the way to Platini are different. So there's a margin that is put. It's called risk-based lending. So each tire has a different interest rate, starting from 15% all the way to 19. Yes, so it varies. So allow me not to give specific, because you'll come and say, hey, no, Violet said it is it's 15. No. But it's when you visit us at the bank, you're able to be told, if it's this your tire, this is the match you're going to be charged. And there's a tariff for that. And we are regulated by the Central Bank of Kenya. And so I do not want to be specific on each tire, but it is a range between 15 all the way to 17%, based on the risk, because it's a metrics that this is the person, this is what they do, and then there are some metrics that calculate. And you
So they should not be afraid that, you know, these interest rates might be something, you know, out of the box, out of the ordinary.
No.
It's capped.
It's capped. Yes.
All right. Are there measures that are in place to help women manage debt distress?
Yeah. Like that's why we have the financial literacy and entrepreneurship skills training. Because, like I mentioned, women, 70% of women in the country are also the ones in charge of their homes and stuff like that. So they will need special skills of how to manage their debt, because they'll be at home, and then they're the same ones being called back at home. The women are emotional beings, so they can easily take money from their business to sort out an emergency at home. So those are some of the things that we really train them on, to have discipline and to manage distress when it comes to debt, because women can easily be, you know, swayed away to sort out more emotional and humane things and forget about the business. That is why I keep insisting. That is why I have Fanikisha that helps them understand. We handle them knowing especially how African women are wired in terms of psychology, in terms of even risk. Yeah, so those are the things we train them on.
Speaking of risk, Violet, I care to know how, as Equity, you mitigate risk when, especially funding early stages of micro enterprises. How do you mitigate risk or manage risk?
I think, by the way, something very interesting. The younger you are in your business, the more disciplined you are. But we definitely have mitigants. I mentioned we have RMs of every category. So you'll find the people in Shaba, we talk to them on a day-to-day, because we have to understand, why didn't you deposit your sales today? Why didn't you? Because if you don't have that, remember, they are still learning this thing. So our hands-on at your early stages is very, you know, we do it much more. Not saying that when you go up the ladder, we forget you, but now at that ladder, we know you have even systems that control your business. But at the very early stages, we really try to deal with you on a day-to-day, because that is how we ensure that from day one, we even notice that today you didn't open your shop, today you didn't have any sales, so that we get to understand, is there anything you're not doing right? Have you changed the quality of products? Do you have new competition in the market? That helps, because we also train you that if this competition has come, this is how you deal with it. Remember, we are also there, we are walking the journey with you to help you grow to the next stage. So our mitigants is that at a very early stage, we deal with you on one-on-one, on a day-to-day. And some of the people who are in Shaba, and there's something we call Pamoja Banking, who are in groups. We have our RMs going to meet those groups every day. Monday to Friday, their work is to meet the various groups. That by the end of the week, they have met all the groups. They understand how their table banking went, who is not paying, why are they not paying, how are you dealing with that? If it's that small kiosk, why didn't they make sales today? And that has really helped the bank. And that is why even the bank has grown from that inclusion stage to where we are, to the transformation stage. Because definitely, I know you know the journey of Equity Bank. We started from an inclusion, and now we are the transformation stage. And that is what has really helped, making sure you deal with these people on a day-to-day. Yeah.
For these people that you deal with them on a day-to-day basis, especially from the Shaba tire, I care to know, right? Have you had cases where somebody has dropped, you know, while still in the Shaba tire, and why? Why do they drop, if you follow up?
Yeah, very different and diverse reasons, but you'll find some even get sick, so they drop. That's why we have insurance that covers that. Some even differences in their homes. You know, women, we also get really affected if you have divorced or those marital, some of very unique things. So then they're demoralized for some time, they're not working, they're not what. So we deal with people from case to case. But if it's something we're able to deal with, we can deal with. But if it's sickness or other things, we just now work with the insurance, but we try our best to ensure that we encourage them that no matter what you're going through, we are your caring partner. So we walk the journey. We can sometimes understand that this paying per month probably is the issue. Do we extend to you be paying in every 3 months? So we have various ways of dealing until we deal with you and understand what your problem is, or what is making you drop off, what is making you not be at par like the rest, is when we offer a solution, because every case is very different and the solution to be offered definitely will have to be different. But one thing I can assure you, we are that bank that understands, so that we offer a solution that is suitable to that particular case at that time. Yeah.
For somebody that maybe has dropped because of various reasons, as you mentioned, and say, for example, sickness, and they get better, say divorce, and they get somebody else and things get in line for them, do you readmit them? Do they start from where they left, or do they also walk the journey afresh if somebody wants to come back?
Yeah, remember, the reason you're in this journey is because of where you are in terms of your turnovers or the business. So depending, if you dropped off at Shaba, we'll definitely start off from there because you're still there. But if you dropped off at Almasi, and when you come back, you're still, your turnovers or whatever, we pick up. So these categories, what I would want you to understand clearly, these categories are based on where you are in terms of your financial strength and in terms of your experience. So we graduate you depending on those parameters. So wherever you come from, or where we pick you at, we proceed from there. Like you'll find some client sick, you are sick for a whole year, like you're in the Almasi category, you are an SME business, doing turnovers of 51 million and above. And you are unwell for a whole year. And I'm giving a practical case of someone I know. So you are unwell for a whole year, and you're the key man of that business. When you're not there, things are running, but not as well as they would if you're there. When that person was back to her feet, we now had to restructure that facility and see, you've ran behind for a certain couple of months, so this is what you do. We don't want to change the amount you're able to pay per month as much as you're in arrears. So those are some of the things that we as a bank will discuss with you on a case-to-case. Whatever point you've dropped, if you're willing to come back, then we are welcome you with open hands. Just like a mother will never disappoint their children. That's the way we operate as a bank. Yes.
Are there gaps that you still think exist when we're talking about how women run businesses, and especially aside from now financial funding? Because now as Fanikisha, you're giving women finances, you're offering solutions. Maybe talk to us about some of the gaps that you think still exist.
Oh, thanks, Anne. So some of the gaps that we feel as a bank still exist is that financial literacy and entrepreneurial skills. We still feel we need to have more of that. And also, we also need to, the other gaps that we feel that a bank needs to come in is insurance solutions. People tend to really take insurance solutions for granted. And insurance, as much as sometimes looks as an expense, it's a solution that helps you. Like when there is fire, for example, in Gikomba, if you've not insured those goods, chances are going back to your feet are going to be, you'll take a longer period than someone who took insurance. So some of the gaps I feel that women have is still the insurance uptake, and that's something that I would encourage most people to take and not look at it as an expense. Even if you've paid for the longest and you have, I believe that fate has its way. The year you don't pay is the year that that's when you'll require it. So the gaps is still we need to train more on entrepreneurship and financial literacy, and also the uptake of insurance. That's something that I feel there are still gaps on.
So why do you think Kenyans are quite skeptical about insurance if the uptake is still quite low?
I don't know why we are skeptical. Personally, I feel like we look at it more of as an expense, because it's not an everyday that you benefit from insurance. And sometimes people say that they had a challenge when it came to claims. I think that's why we are a bit skeptical. But as a bank, one thing you need to know that we are out to ensure that you get back on your feet. I am yet to, we have almost none, because we ensure that if you insure with us, we pay. Because remember, chances are insurance is an added product. You have a facility, we have given you an insurance cover. So if anything comes up, why would we not pay?
Yeah.
So I think it's important to look at insurance as an added advantage and to ensure that you stop feeling insecure when it comes to insurance. Look for a good partner on when it comes to that, so that you stop looking for shortcuts when you're getting the insurance and want to get away with a good premium. But when the actual loss occurs, it becomes a challenge. Sometimes there is something that has to give. Go for brands that are recognized, and you will not be worried or you will not be disappointed when it comes to that. That's why I would encourage people to take insurance, especially with us. Yes.
You know, some view insurance as some sort of investment. Is it an investment?
Yes,
really?
it is. It's actually an investment. Because if you incur a loss and you're compensated for that, isn't that an investment? You did invest for you to ensure that if a loss occurs, you're compensated. So insurance, for those who've really gone through that training and been trained and taught of what insurance can really do for you, insurance is actually an investment, not an expense. That because the more you give, the more the premium you pay will definitely come through at some point when the loss occurs. So if you start looking at it as an investment and not an expense, then I think we will go somewhere as a country. Yes.
What target do you have as Equity Bank as far as Fanikisha is concerned? Looking at Vision 2030, what is your target?
Our target as a Equity Bank is to have true measure of transformation, where we as a bank, we're able to see how did we transform these women. Because one thing you know, that women are quite the engine of the economy. So when you empower a woman, you're empowering a family, a community, and the country at large. So as a bank, that's what we are looking to measure. That how many women did we impact? How many women were able to transform their families, their communities, and at the end of the day, as a country, that is what as a bank we are looking at. That's what will really measure our success. Yes.
Do you have some maybe challenges that you say that as Equity, because I'm trying to think, you people have a lot of money. Do you even have problems as far as dealing with Fanikisha, this program and campaign is concerned?
Okay, maybe the challenge would be if, because at the end of the day, terms and conditions must apply. So maybe what I would want to make it clear is that do not give up, because when you join us and we tell you you need 2 more months to do this so that we can offer you this, don't look at it like it's rejection. It's part of the journey. It's part of the journey. Because I feel like sometimes human beings, now that we've said we are here, Fanikisha, we are sorting your problems, you want to come tomorrow and say, give me 10 million, and I give 10 million. What I would want to encourage people is that it's a journey, and a journey starts with walking to us, telling us you want to be part of this. And so when we start the journey, it doesn't mean I have to give you money, but I can help you now learn how to keep your books, how to even start banking with us, so that we start having history or understanding your pattern as a business. And that's where the journey starts. So as the challenge what I would call as a challenge right now is having some people think that we have to give money today because we've said we have money. Money is there, but there is a journey that has to be taken, or there are some terms and conditions that must apply when it comes to lending money. And we must also ensure that when we are lending you, we are helping you. You know, sometimes we can give you money and it becomes disaster instead of helping you in terms of giving you money that you're not able to pay. And now you get into the distress we were talking about.
Yeah.
So it's important for people to understand that the journey starts by talking to us, and you'll get relationship managers who talk to you and walk to you the journey. And the journey does not mean always being given money. There are many other ways that we walk this journey. Yes.
We've come to the end of this conversation, Violet, but tell us how someone can sign up for people who are just joining in as we close the show.
Yes, for those who are not equity members already, you can dial *247# and you're able to be onboarded. And for those who are existing clients, you can log into Equity Business, Equity Online for Business, or you can send an SMS to 24990. You indicate your name and your location, and someone will reach out. Within the week, someone reaches out to you, lets you know which branch you're going to be served from. Yeah, so that's how you're able to reach us, or walk into any branch near you and you'll get someone to support you.
All right.
Yes.
Thank you so much for making time.
Thank you for having me.
And I think I'll also sign up.
Oh,
Fanikisha.
please do. So clearly you mentioned that you're in another bank that you don't. So
I'm actually a member of Equity.
Oh, great.
So this is Violet Gikuno. She is the Equity Bank Kenya Relationship Manager, High Net Worth Individual, speaking to us about Fanikisha, a program that is aimed at empowering women and transforming the country's economy. We've come to the end of it, but keep interacting with us on our socials, TV47 Kenya on Facebook and on YouTube. It's TV47 Digital on X. Be sure to use the hashtag TV47 Breakfast, hashtag #StoryNiyetu. If you have any questions for Violet here, we'll be happy to pass them through. You're watching TV47 Breakfast. Don't go too far because Man Talk is coming up next, the Just In Case Woman. Every man has one. That is a question that we're asking this morning. Freddie will be back with that conversation. Stay right here. Good morning.